After the huge Equifax data breach, the worst one in history as far as I'm concerned, because the hackers got everything they need to steal 143 million identities, including mine, you'd think that the cybersecurity stocks would be on fire. No executive wants to follow in the footsteps of Equifax's now former CEO, Richard Smith. So you have to believe that many companies will spend more to protect their data. Yet the actual cybersecurity stocks have barely budged. In some cases, they've even gone down since the news broke almost 3 weeks ago. Take the stock of Palo Alto Networks, PANW, the company that pioneered the next-generation firewall. Here's a market darling that had fallen from $200 in the summer of 2015 down to $107 this past April. Since then, Palo Alto has been able to rebound pretty dramatically, up more than 30% from the lows. However, just a couple of days before we learned about the Equifax hack, Credit Suisse initiated coverage on Palo Alto with an underperformed rating, arguing that the stock had run too much and the company might not be able to maintain the rapid growth rate that many investors are hoping for. So the stock got hurt, even though Palo Alto's latest quarter, reported less than a month ago, was pretty darn good. So is the market being obtuse here, or is there a good reason why this stock hasn't run, despite the fact that cybersecurity is back in the headlines? Let's take a closer look with Mark McLaughlin. He's the chairman and CEO of Palo Alto Networks. Get a better sense of what's happening here. Mr. McLaughlin, welcome back to Mad Money.
Yep.
Good to see you, Mark. Have a seat.
Thanks for having me.
I have to admit, I am surprised that your stock did not run in the face of these hacks. But I recognize that Credit Suisse is taking down in new territory. They feel that your stock is overvalued because you can't possibly grow as fast. I look at it as undervalued because you can obviously grow faster.
Mm-hmm. Well, I would think we have great opportunities in front of us. I just literally came from our analyst day. We do every year. We were telling our analysts who follow the company about the 3 evolutions in security, all of which Palo Alto Networks has invented and led, and all of which are growth drivers for the company, not just in network security, but in endpoint and cloud security, and with a new innovation we brought to market called the application framework, a new way to consume security innovations through a single platform.
Well, let's talk about the obvious one, Equifax. Okay, so let's say I am a customer. And there is a customer of Palo Alto, and I get this thing called a patch. I hear about this Apache strut and a patch. Something has to be fixed. Do I call you guys and say, listen, I am really worried that somebody's going to get in. I'm a subscriber. Will you help me?
No, it's actually, that's the beauty of the platform, right? That's a problem if you have to do that. And that's one of the problems in security today, which is what you want to have happen is highly automated prevention. Right? So in this case, if you have an exploit or a vulnerability, what's supposed to happen, what can happen is that it's identified prior to do something wrong. You find it if you have it anywhere in your environment, whether it's in your endpoints, your network, and cloud environments, and it's automatically updated and fixed. Like that's the way it's supposed to work.
But to give Equifax its due, which is difficult, but I will. And apparently there were like little warrants and kernels where it wasn't fixed. I mean, how do you know that you get to it?
Well, everybody's got their own unique environment and situation, right? So I don't know all the details of the Equifax situation. But if in a lot of cases, what we see are cases where actually the capability sets that companies are running might actually know the answer before it's a problem, but it doesn't make it everywhere it's supposed to go before there is a problem, right? And this is because companies have been running very siloed, disparate capabilities for a very long time. And that's what we invented was the whole idea to say, that's not the way to do it. You need this all stuff to be automated and orchestrated and take the humans out of the process so somebody doesn't have to get alerted and go fix something somewhere.
I was surprised about the SEC hack. The federal government orders that you get have really become very substantial, and yet they seem like they were very, let's just say, caught unawares by what happened.
Well, I think it doesn't matter whether it's education institutions, governments, enterprises, everybody's suffering from the same problem, which is historical in nature. It's not because people didn't know what they were doing. They really didn't have any choice.
Right.
He said if you wanted to do security, you had to buy A, B, C, D, all these vendor after vendor and vendor, install this stuff and run it, get the people to manage this stuff, and hopefully you make it all work together.
Right.
And that's what we've solved is to say this stuff can all work together in a highly automated fashion so you can do highly automated prevention.
At the same time, on the conference call, because you're a tough guy who talks about the competition, you said you took an 8-figure replacement from Cisco, a 7-figure from Check Point. I mean, you're out there taking, it's not just new business, you're also taking it from others.
Which we've been doing for a very, very long time. We posted a $509 million quarter, 27% revenue growth year over year organically as well. And
that's why I was troubled by the Credit Suisse report. If you're doing so much better, why isn't that possible? Particularly because you came on our show and you said, look, we had a sales force issue. We had to be able to make some changes. We split up our territories too often. Believe in us, we're going to come back. And you did it the next quarter.
Yeah, you know, one of the things I tell the team internally all the time is if you're in a privileged position like we are, which is you can, about a 10-year time frame, go from zero to a couple $2 billion very quickly, all organically, you have to execute very well. So we're trying new things all the time to make sure that we can grow reasonably well into the future. And we got a few things wrong in the Salesforce stuff. We fixed it right away, and working on it. We're about halfway through all the things we need to do, but they're paying dividends already in Q3 and Q4.
Now, this Equifax was so big, I have to believe that this was a phone ring off hook event. I have to believe that some of your salespeople, not just making outbound calls, but got a lot of inbound calls. This was really serious.
Yeah. You know, what happens when you have major breaches like this, first thing is we don't chase the ambulance. Nobody in companies appreciates that. So if your security company is dialing in the next day saying, first of all, I could definitely have stopped that for you or something along those lines, you're going to be ignored, and you probably not get invited back later. Good point. You know, our approach in all these is to, over time, is to say if we could be helpful and talk to people about things, we certainly would take the opportunity to do that. How to think about things, how to get the automated prevention, and after the fire's out, you know, for whatever companies are, after the fire's out, and you're thinking about the architectural design for the future, that's where we get to come into play.
Well, if I were a big company, I would call you into the boardroom and say, you tell us what we need to do. And I mean you, because I think you've got the right story.
Well, I appreciate that. I get to do that often. Thank you.
Okay. That's Mark McLaughlin, the chairman and CEO of Palo Alto Networks. Call me in the bull camp, not in the Credit Suisse camp. I think this is a great story. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.